this trader made $1.1 million in 3 months. Hi, it's Charlie giving you Saturday's video. I'm actually recording this still on Thursday because I'm away this weekend, but I wanted to just share this with you because for one, it makes for a good headline, but two, there's a learning point from this. So let's go through this. So bring my pen up. So $1.1 million in 3 months. This is one of my members in our trading community. So he sent me a message about a week or so ago within our trading room saying, Charlie, just want to say thanks, da 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 da. I won't go into all the details, but he's made $1.1 million and in 3 months. And of course, this is a great headline, but then you have to put it into perspective. He is a money manager, so he's sort of professionally managing money. So then you say, right, so it's all relative. He might be, I haven't actually asked him the personal information of how much he's actually managing, but for argument's sake, let's say he's managing 10 million or 20 million. Well, on 10 million, obviously that's 10%. Pretty much in 3 months, which is still a really good return. But if I said to you, someone who was trading with $2,000 in their trading account made 10% in 3 months, you wouldn't probably be quite as impressed now, would you? So it's all relative is where I'm getting to. I've got another trader, one of our senior members. He on a single trade made about, it was over 300,000. I think it was something like that, 300,000. This was a couple of months ago. He was telling me he'd made on a single trade. Now that is big off a single trade. But again, it's all relative. I know what he trades with. So he trades with a larger pot of money. So again, headline figure is impressive, but again, it's all relative to what a trader is trading with. So again, what we always have to look at is what are we trading with? What's our what's the return? What's the percentage return? Or even more importantly, what's the R return? Because what when we look at percentage returns, so if someone said to you, I made 100% return, you don't know, without knowing how much they're risking per trade, whether that 100% is actually a good return or not. It could be an appalling return if they're risking huge amounts in order to make that. So if you were risking 50% of your entire account in order to make 100% return, well, you might have made that on a single trade. Well, is that then good risk management? No, it's not. You're risking too much, and you're susceptible to blowing up. So the risk adjusted return is what's more important, because you could have someone who makes 10% in a year, and you might say, well, that's not very good, Charlie. Well, if that person is risking 0.1% per trade, then you'd say, well, actually, that's a pretty healthy return down here. So again, when you hear, and I've put that up purposely as a headline grabber there today on the 1.1 million and the 300,000, they're all relative to account size. So percentage return is important, but again, within my funds, then we look at my asset managers who regulate me. They have all sorts of stats, and they look at things like risk adjusted returns as well. So how much is my return based on the risk employed? That's an important figure as well. But nevertheless, what I think is also really important, actually another thing that's important here, our trader who made 300,000 on a single trade, and people are like, oh great, I want some of that. Well, just so you know, that he quite readily admits that he is right, like I am a lot of the time. He'll be right on his trades, between sort of 30 to 40% of the time. So he doesn't trade with a high win rate. He just trades based on risk to reward, which we spend a lot of time talking about. So risk to reward is important. So he looks for those high risk to reward ratio trade opportunities. So he's not bothered about trying to be right all of the time. And you get people out there who are constantly trying to they want to be right all the time as much as they can. Oh no, I've got to be right on this, I've got to be right on the direction of this and the direction of that. No, you haven't. You just trade your strategy, you trade your approach, you trade your analysis, and the bigger the risk to reward, naturally the overall win rate will come down, because the longer that you're trying to hold, let me just clear this a bit, the longer you're trying to hold on to a trade for. So if trade comes this far, it'll have a given probability of it just coming this far. But if you're looking for it to come up to here, well, if you were banking it here, yes, that might be fine, and you'll hit that target a lot of the time, but you're not going to hit this target as frequently. But when you do hit it, you get those bonanza risk reward ratio sort of trades. So there's a lot that goes on with trading. It's not about being right. It's not about, wow, look at how much money that is, because a lot of the time it's relative to the account size that's being traded. And so when you are looking at someone who is trading on a £2,000 account, for, as I've just said, who has made 10%, don't snub that, because 10% on any account in the space of, let's say, 3 months is a nice return. 3% a month is a good return. If you did that every single month, that's a solid annual return there. So do look at that, and don't always look at those headline figures. Delve, from yourself perspective, from your own perspective, look at your relative return. If you are trading on a £2,000 account or a £5,000 account or dollar account, it's very easy to think, oh, I've got to turn that 5,000 into 10,000 or whatever. But do remember, if you do, that is a phenomenal, fantastic return from trading. To make 100% in a year or whatever is a great return. And yet, if someone did that on £1 million and they made £1 million in a year, you'd be massively impressed. But if you heard that someone turned 2,000 into 4,000, you wouldn't think much of it. So yes, £1 million trying to turn a million return, or 100% on $1 million, psychologically is different. It requires different psychological skills, so it is more difficult, in fact. But nevertheless, the returns are the same, and someone who's turned £2,000 into 4,000 should not feel frustrated, because if you've done that and you've turned a small account into a slightly larger account, whether it's 2 into 4, 4 into 8, 8 into 16, whatever, you should be giving yourself a pat on the back, because those are fantastic returns. If every trader out there could regularly put in, and when I say regularly, I don't mean every week or every month necessarily, but every year they could put in quality performance, then, and that doesn't mean making 200% every year or 100% every year. Quality performance could be anything, sort of 30% upwards. In fact, 20% for some traders is a great performance. If you've got 500,000 in your trading account and you're putting 20% a year in, that's a really good performance, isn't it? So for everybody, it's unique. For everybody, it's personal, like I've gone through there today with you. So a little bit of a headline figure to capture your attention, but also a little bit of food for thought here about returns and relative returns as well. Hope you have a lovely weekend. If you want to add anything into the comments, by all means do so, and I shall see you next week.